Hello everyone, I'm Sunny Weiderman, the tax lady from Personal Tax Advisors, with a tax tip about paying income tax by installments. Now, here at Personal Tax Advisors, we get this question a lot. Why did the CRA send me this letter telling me I have to pay tax by installments? If I don't pay, am I in trouble? So let's start by talking about what installments are and why you're being asked to pay them. An installment, like it sounds, is a prepayment of your taxes. Instead of just filing a tax return at the end of the year and paying a tax bill at that time, you're starting to work on that tax bill during the year while you're earning the money that is going to be taxed. Now, not everybody has to pay tax by installments. Most people who have salaried jobs don't have to make installment payments because their employers are withholding tax from their paychecks. In effect, the employer is making tax installments on behalf of the employee every payday. But there are other ways to earn taxable income, including investment income like dividends and capital gains, and self-employment income. When it comes to these forms of income, generally no tax is being withheld while the income is being earned. So at the end of the year, if the income triggers tax, the taxpayer may have a tax bill. So the tax is paid at the end of the year, but the income that triggered that tax was earned before that, during the year. In effect, the taxpayer has been able to defer paying tax for a few months. While the Canada Revenue Agency doesn't really mind a delay on a small tax bill, it starts to bother them when you have about $3,000 or more owing at the end of the year. And that's when they start asking that you pay installments through the year. Specifically, if you have a tax bill at the end of the year and it happens for 2 out of 3 consecutive years and it's for more than $3,000, CRA is going to ask for their tax by installments. So that's the what of installment payments, but now let's talk about how much. When you get an installment payment request from CRA, they make the assumption that the earning pattern this year is going to be similar to your earning pattern last year. So what they do is they take your prior year tax bill, divide it in 4, and ask for 4 equal payments of that amount. These 4 equal payments are attached to CRA's installment payment due dates, which are equally spread out through the year on March 15, June 15, September 15, and December 15. These payment due dates are supposedly associated with a period that came before. So for example, the installment that you pay on June 15 is supposed to be for income that you earned between January and March. That means that the March 15 payment is supposed to be for the income you earned the prior year between October and December. So in other words, by the time you file your taxes on April 30th, if all goes well, your tax for that year has already been paid in installments. All well and good. But this can create confusion, and I'm not going to lie, a little bit of despair when people get their very first request for installment payments. Remember that you pay your taxes or you file your tax bill in April. And by the time CRA processes your return for the prior year, you're almost halfway through the current year. And remember also that I said that the installments are intended to pay tax on income that was previously earned. So when you get that first installment payment request, maybe in July, they're going to want you to squeeze your current year installments into what's left of the payment schedule. And so now, not only have you just gotten a tax bill for last year, you may now be asked to pay by installments for this year, starting with a doubled up first payment. And that is a big thing. And this can be daunting to say the least. You may not even have the cash to pay this one payment on the heels of another. So now what? The short answer, if you don't pay your requested installments, or if you pay only a portion of them, generally you get charged interest. But that's it. Once you're on CRA's installment payment list, they see a missed installment payment or a late payment or a too small payment. And as with late payments just about everywhere, interest applies. Interest rates at CRA technically are reset every 3 months. They've been pretty steady over the last several years, but now, things may change. They're probably in the 5 to 6% per year range, but you can check the website to see what the current rate is. But if you do miss installment payments, don't really worry that you're on some kind of hit list with CRA or that you're going to be in trouble or that they're going to give you a hard time next year. Basically, paying the interest has cleared you with CRA. It's all good. So the installment amounts are always an estimate of tax owing. It's the completing of your tax return that calculates the actual tax owing on the amount that you actually earned. And as always, your tax liability, the amount of tax that your income has generated, is compared to your installment payments and any other tax that has been withheld on your behalf to see if you've prepaid too much, too little, or just enough. If it's too little, you're still going to have a tax bill to clean up the difference. But if it's too much, you'll get a refund. And if it's right on, I think you get a little prize. I'm kidding, no prize. So I also do have a blog post on this subject, and I will put the link in the description below. And if this video has helped you at all, please do me a favor and help me out by giving me a like. Subscribe and hit the notification bell if you want a heads up when I post my next video. And if you have a question about paying tax by installments or have a suggestion about what you'd like me to cover in my next video, why don't you drop me a line in the comments below and I will take a look. I'll see you next time.